You. All right, so let me post the link real quick. We'll get started in a couple minutes, just sending out the links. We'll give it like 2 more minutes. Yo, what's going on, Jonathan? What's going on, Ryan? Yo, what's good, Derek? Yo, what's good, Chris? Yo, I don't even know how to say your name. What is it? Lollyd? Oh, cool. It's live. All right, cool. We'll just give it a couple more minutes, then we'll get started. We'll get started at 2:05. It's 2:03 right now. You guys ready for this trading week, though? What pairs are you guys watching? One more minute. Derek said go for sales. Ryan, GU, US 30, NAS 100. Okay, so you like the indexes. Yo, what's up, all you guys? So I'm just going to go ahead and get started. It's 2:05. We gave everybody about 5 minutes to jump in. All right, so the first thing I really wanted to go over in this webinar is going to be time frame correlation. This is where a lot of traders, end up losing, not understanding where they're at in the market, why things are happening the way they are at certain levels. So what I'm going to do is go to the sketch pad. And what I'm going to show you guys is basically how I personally view structure. All right, so what I'm going to do first is just draw a normal structure in the market. So let's say we have something that looks like this. All right, so normal downtrend turning into an uptrend. All right, so we can obviously see that we have swing points, right? So we have the highs and lows, high, low. We have a high, and then this turned out to be a higher low, and then price broke structure to a higher high, and these are all swing points. All right, so this is what I would call market structure. So for an example, for me, I usually analyze market structure on the H4 time frame. Okay, the H4 time frame is strong enough for me as an intraday trader to basically, have enough of a pip range to catch what I need to, before price can potentially transition in the opposite direction. All right, so let's do that, and then what we're gonna do is change the color now. So let me see. We'll change it to red. All right. Yeah. All right. Cool. So there's two kind of structures that I view. There's market structure, and then there's price action structure. All right. So price action structure is going to be all of the minor pushes within these legs of structure. Okay. So price is never going to look as smooth as these lines. It's going to, pull back. Oh, what is this? Hold on. Let me change this. I don't know what I did. Oh, okay, there we go. Put that as 0, and then, yeah. All right, hopefully that's it. Let me see. What is going on? My bad, you guys. 1 second. I'm trying to figure out how to use this thing. What the heck? Hold on. Linear color. The craziest part is it was working perfectly fine before this. Yo, it was good, Joe. All right, so let me just do it on the actual chart because that thing is straight tripping. So basically, we have two forms of structure, right? So we have market structure, which will look like this. And then we have price action structure. So basically, what price action structure is going to give us is all of the minor pulls in the market, like pushes and pulls in the market. So it's going to look a bit more choppy. All right, now price action structure is always going to give us a hint in when the actual market wants to reverse as well. All right, so basically the red line is going to be our price action structure. Now, where a lot of traders get messed up is that they can't understand the difference in market structure and price action structure and what it means exactly. Now, keep in mind that the black lines are going to be our H4 structure. Now, that means, for an example, all these minor pushes are most likely structure levels on like the H1 time frame or the M30 time frame. So you're going to see reversal patterns show up in price action structure that drives the market the opposite way. And once again, at these pivot points, you're going to see those, those reversal patterns and breaks of structure that you're going to start to see form. Now, I like to call them transitions because a lot of times it'll break levels of support and resistance before it actually breaks, the last lower high or the previous higher low. So what I'll show you guys now is an example of what I mean by that. All right, so let's take this area in the market. And we can see that price is making higher highs and higher lows this whole time. We pulled back, maintained this level of support, pushed higher, made a new support level here, pushed higher, new support level here, pushed higher. So overall, in my own opinion, I need to see a 2-candle pullback before it's an actual firm higher low. Now, this was just choppy. It was a gap, but when there is a gap, I like to just think that it was a candle. So we can say that this point here was our last higher low point that led to this overall higher high point here. Now, if this is the case, what basically drove price from this point down to here is what I'm trying to explain to you guys. and how you can actually trade this and not be confused. Now, the first thing you can see is that price pushed down, established the level of support, and then pushed upwards, right? So we see we established another level of support here. Now, what did price do after that? Shot down a bearish engulfing candlestick. Now, that is a transition in price action structure. Although we did not break the previous actual support levels or the previous higher low, price is transitioning. It's telling you that it wants to go bearish because it's now breaking floors. It's no longer breaking resistance levels. It's breaking through floors. What's good, Dan? All right, but nonetheless, it's breaking floors now. So what price is going to do when it shows you this kind of stuff is do a break of the support level, and then it's going to retest at one of three places. Okay, so basically it's just creating a double top or like a head and shoulders pattern. Now, on lower time frames, this is what it's basically going to look like. It's going to look like we broke that level of support here, and price is going to either retest the neckline, all right, potentially like a shoulder area. So like, let's say there was another level of resistance formed over here somewhere, potentially like a shoulder area it could pull back to, or it's going to retest the head. Okay, now double top patterns, usually it's either the neckline or the head. Head and shoulders patterns, it's usually going to be the neck, shoulder, or head. Okay, in this case, we can see price actually pulled up to the neckline and rejected, and then price broke through, and it overall wanted to come up to return to impulse. Okay, so basically the head is where the impulse started. This is what started this bearish push to break through a level of support. Once we have that break through support, we're waiting for a retest of resistance to take it short. All right, as you can see as well, once we had that short happen right here, we established a zone off of these wicks right here. All right, and you can see price perfectly pulled back to our zone, to our impulse level, whatever you want to call it, and it gave us the transition on lower time frames to now go short. So this is once again how I catch those crazy entries. Now, if I highlight this area here, and let's go down to like the 3-minute time frame. Let's see if it'll let me go back there. All right, we're almost there. Oh, don't tell me price isn't going to form anymore. All right, let's try 5 minutes. The charts are like super laggy right now. All right, so this is the 18th of January. So let me try to just fly this there because this thing is lagging pretty bad right now. All right, there we go. Still not going to let price go that far. All right, so we're just going to have to use 15-minute. I usually enter off the 3-minute, but we're going to use the 15-minute for this example. But nonetheless, okay, so the number one rule when it comes to my strategy is like you never want to take a trade before it actually hits the zone. All right, so this right here, I would not be trading it yet because it has not actually tapped my zone. Until we had this wick right here tap my zone, we would not be trading it. Okay, so once price actually pushes up into the zone, what you're going to notice on lower time frames is that we potentially had some kind of trend line that was maintaining higher lows on lower time frames. We got a break, retest in this area where the wicks are, and bearish engulfing shooting down. Now, since we cannot go that far back right now, what we're going to do is just use the M15 trend line based off of point A and point B right here. Now, with point A and point B right there, we see we get the break, we get a retest of the trend line, and then we get a bearish engulfing variation right here. So this is a 3 candlestick pattern. And after that close, we could have taken an entry. Now, once again, I'm preferred to enter off the lower time frames because you're getting in way up here. You know what I mean? Like now you don't have to worry about drawdown. You don't have to worry about, you know, a huge stop loss. You're already in profit when all these other people are going, you know, into a trade. All right. So for an example, if we had to enter down here, our stop would have to be at least, I would say like 20 pips above this high right here. But what we can see is that price fell away after. All right, so here's our trade way up here, 20 pip stop loss. You can see overall this trade fell to the next low for 200 pips. All right, so this is a 1 to 10 risk to reward right here. So there's one trade, if you just held it, this was a 1 to 10 risk reward. Now, I also tell, you know, my traders, for an example, if you want to secure more profits, what you can do is take your first profit around H1 or H4 levels. So for an example, in this case, it would be H1 or H4 support. So for an example, when price fell to, you know, retest this level down here, what you could have done is taken partials. So you could have taken off 30% of your order, 50% of your order, and secured it and then rolled your stops, okay? So for an example, now you can put your stop at -5 pips, right? And what you'll see is price actually never went back into drawdown once you took your entry here. It retested, you know, so you might have been up, you know, at break even or +1 pips, but you never actually went negative again. So you would have still been protected with the tighter stop loss here. All right. And then price literally crashed, you know, and hit your TP, your final TP down here. All right. So by us understanding price action structure transitions on higher time frames, we can literally cash out by catching, you know, the tip of those transitions. So when we snipe these entries off of zones, we can use very, very small stop losses. Now, once again, this was an example with the M15 bearish engulfing. If I'm entering with the M3 bearish engulfing, my stop loss is usually now only 5 to 10 pips because I'm getting in at such a high level. Okay, so for an example, if we now had a 10 pip stop, we are now making almost 21 times what we risked on this one entry. Okay. So the main thing you want to keep in mind when we're looking at things such as time frame correlation is, you know, did price break through support or did it break through resistance? Okay, so you ask what trend it is. For example, here, we could say like this area right here. Are we in an uptrend or a downtrend? That's my first question. After that, it's where's the market momentum flowing to? Is it up or is it down? So when you ask yourself about momentum, you need to look at is price breaking through floors or resistances. All right. So for an example, just by looking at the price action here, I knew once this level was broken, this support level, price was not just going to shoot up to new highs here. Instead, what I knew was going to happen is it was going to retest resistance and push back down because price now has to transition again. Okay, so basically how this area is working is that we established level of support, price tried to break it, could not break it. Now we're maintaining resistances and breaking through supports. So if price wants to go back bullish, we have to transition back bullish. So as we can see here, we try to push up past resistance, we can't. So then we fall again, retest, make a new level of resistance, and then we break past it with that engulfing right here. Okay, so once we break past this level of resistance with the engulfing, that is confirming now that we're ready to go back up into an uptrend structure. All right, so by paying attention to these little clues in the market, you can keep yourself from, getting into premature entries and, potentially getting faked out, even though I don't truly believe in that. All right, so by understanding that information and how we trade, we know we would be looking to catch a trade or a buy off of this level here. Now, if we jump to the H1 time frame, what we can see is that price on the H1 time frame was forming a higher time frame pattern. So this was a double bottom on the H4, but it looks pretty choppy on the H1. So the main thing to remember is once one time frame transitions, so let's say the M1, then the M3 has a transition, M5, M15, M30, and so on. So for an example, in order for the H4 time frame to set up a double bottom pattern to transition, H1 had to break into uptrend structure and then transition back into downtrend structure in order to form another bottom. Now, once again, this can fake out a lot of people. This is why I use H4 structure as my main, market structure. So for an example, all this is on the higher time frame is a double bottom. But in order for price to make that double bottom on the H1 time frame, we had to start breaking ceilings, right, and drive price up. And then we had to start breaking through floors. Okay, we had to break through floors to retest the overall level of liquidity here. And once we got that, we transitioned back into the overall uptrend. Okay, so what I'm going to show you guys now is in this same area, we can see on like the M15, on the M5, all these levels on, different time frames, you can see the transition off of these levels. And basically price is, price is on every, price moves the same on every time frame. The only difference is 1 minute has to set up before 3 minute, 3 minute has to set up before 5 minute, and so on. So let's see, they'll let me go to this place on 1 minute time frame. Where are we at? Thank you guys for hopping on. I appreciate it. So what is this? February 23rd. It was good, Basso. Thanks for coming, Jana, Josias, Dan. All right, so nonetheless, we're at our zone now. And I had a comment on one of my YouTube videos, and it was talking about how do you not get faked out on lower time frames? Like how do you know when to actually take an entry? How do you know when it's actually transitioning, etc.? Now, there's several keys to this, but the first one is you want to know when to trade these pairs. Now, this is AUD/USD. So I know it sets up during New York session and Aussie session. So for an example, I know New York session starts around 5 o'clock a.m. for me, PST, and then it goes on until, I believe market close at 2 p.m. Now, look how perfectly this sets up and aligns with the strategy. Right around 5:30, we get that final crash into the zone here. Okay, we get that crash into the zone right here. We establish a level of resistance. We break through it, right? So we make a new high and we retest this level here, this zone as support, and push off of it. Now, what does this look like to you guys? Shoulder, head, shoulder. Okay, so this is showing you guys a transition. Now, once again, this isn't a confirmed lower high point. So no, structure did not break yet. Structure did not break until this price action, or I'm sorry, this previous level of structure was breached up here. But in order for price to reach that point, it had to transition and start breaking through ceilings and maintaining floors. So now you can see floors maintain, floors maintain, floors maintain, and so on. Now, once we pushed out the previous structure, you know, now we're transitioning on other time frames. So now the M3 time frame has to transition. All right, and if you guys can truly understand this concept right here, you guys will be extremely profitable. Okay, so now we look at where do we need to see 3-minute transition in order for us to, you know, see price continue pushing away from this zone. All right, so we can see we have a level of resistance right here. Now keep in mind, 1-minute transition way down here, right? So if you're taking buys from the 1-minute transition, you got in way down here. Now, if you're getting in off the M3 transition, we see that break here. We see a push up, retest, and a follow through there. So that's showing that M3 is now transitioning, right? So now price, once again, starts pulling back, but overall maintains this new level at support. All right, so we need 2 candles to break under a level for it to actually be broken. Since we got a bearish and a bullish candle pushing right back upwards, this does not count as a valid break. Then we get this bullish candle here that once again closes, you know, at that level. So now we're pushing up. This is what you call an overshoot. So for people, for an example, who are trading this as a breakout of a consolidation area, so I would say more of like the scalping type, what they would be doing is trying to, you know, box this off like this. And for people who don't truly understand how the market works, they're going to get faked out into selling it here because they're going to think this wick right here means that it's a valid retest to the outside of this consolidation and the price is going to fall away. But we understand that this price already transitioned, right? We understand from this right here, this break of resistance, that price is now maintaining floors and breaking through ceilings. So once we got that break, retest, and follow through, we're done with this time frame. All right. So basically what I'm showing you guys right now is how I maintain entries as well once I'm in them. I want to see every time frame transition after I enter. So if I enter off the M1, I want to see the M3, the M5, the M15 transition. All right. So I'll show you guys one more time frame. All right, and let's see. All right, so now, once again, we're looking for where does the M5 want to transition, right? So we got M1 transition here, M3 transition here, and now what we want to see is M5 transition. So we can see price pushes up here, makes a resistance, maintains the resistance. We cannot break it, so that means price is not going to push up yet. So overall, price can retest, you know, up until this point here before we know it's a confirmed lower low to follow the trend. All right, so we finally see a break of resistance here on the 5-minute time frame. All right, so we got our first break, we get our retest, and then we get our follow through here to a new high. So once I see that, I know that now we've confirmed a transition on M5. We also broke the last lower high, so this is a good sign that price is going to take off. So I trade the same 4 pairs or switch them every week. I personally trade the same pairs. So for an example, even though I have all these up right now, I usually only trade EUR USD and GBP JPY. All right, so nonetheless, basically, you know, what I'm trying to show you guys is how you can predict the next move in the market. Okay, so let's take this area for an example. How could you know when the market is ready to reverse? Now, people always say like, oh, you can't do this, like it's not possible. I won't say I can do it 100% all the time, but a lot of the time you can predict it by understanding price action structure. So we understand that this move right here is all market structure. This move here is market structure. This move is market structure. But what if you paid attention to the minor price action movements in between? Okay, so we have a level of support, price is, working its way up, right? But what happens here? We established the level of support and then we broke it. Okay, so once we broke that level of support, although it technically wasn't this last level of support down here, we already started transitioning. So now we're transitioning with the overall higher time frame market structure because we obviously broke structure here to a downtrend. All right, but how did we know not to sell it here or here, even though there was bearish engulfings, even though there was exhaustion? The key and the way we understand not to get faked out by the market is by waiting for price action structure to transition. All right, so overall H4 transition back into a downtrend structure here. We get that retest to a previous level of support and we're maintaining it as resistance right now. So now, if I highlight this area here, we now have a zone of liquidity that we're now looking to trade off of in the future. So on this tap here, this tap here, this tap here, these are all entry points on lower time frames that we can take for this sell trade. All right, so once you're in a trade, you're going through each time frame to confirm market flow. Correct. So basically, I'm going through every time frame to confirm transition. Okay, so I want to see each time frame transition to continue going. Like basically, the more time frames that transition, the longer you can hold the trade. So if I take an entry off of like the M1 or the M3 and I see an H1 or H4 structure level be broken, I know I can swing this trade now for like the daily time frame. The 4 hour strong, 4 candles cannot break and go higher. Yep, exactly. So with us knowing this information, we now have a zone, an exhaustion zone. We're now going in with the overall higher time frame trend of a bearish market flow. Now what we can do is drop down to our entry time frames. All right, so this is another tap to our zone after our zone is established. So number one, what I'm doing is looking for areas that are being maintained by trend lines, right? So we push up and tap the zone, but overall we have this trend line being maintained. We get 1 tap, 2 tap, 3 tap. Here we try to break through it. This was a little fake out, but remember, we need to actually retest the trend line in order for it to, reject and give us that bearish engulfing. This was floating, this was kind of just floating away from the actual level of support that was broken here. Also, you can see, of course, paying attention to detail, the bearish engulfing closed at support, not past support. Okay, so that's how you can kind of know if price is going to retest. You can also look to the left. You can see that this was a level of support. So if price was ready to fall here, it would have basically closed under this level of support and it would have retested as resistance and fell. All right, so price tried to throw a little fake out there. Price pushes back up higher into the zone. Then we finally get a break of that trend line, a retest, and then we get 2 bearish engulfings off of it. Okay, now once again, you can see the difference here in how the actual price closed around this low. So we can see here, all right, so if we zoom in here, you can see that price closed lower than the support level here. Now, even though it retraced, that's something that you have to pay attention to because a lower low, lower close is telling you something. It's telling you that this level is no longer strong enough to hold price. Okay, it may reject from it, it may retest higher, but it's no longer strong enough to maintain price. Okay, so nonetheless, price starts putting in lower highs and lower lows. So this is all just a buildup. All right, so once you see this kind of momentum coming off of the trend line, this is just getting you more entries. This is a bearish engulfing here. This is a bearish engulfing variation here, bearish engulfing here, and so on. Price falls away, retests, and drops. Okay, so let's say we took our entry off of, let's say, this bearish engulfing here. Once again, just to even get above the shoulder, you know, that's retesting this trend line, for example, is only like 10 pips. If I want to be above the zone, it's literally 12 pips in this case. Jana, normally I do not trade on Monday. The Monday builds like the wick of the weekly candle, and on Tuesday, the daily candle, if the trend is strong on the lower time frame. So personally, I don't really look at how the candles are being built and all that. I go off of the levels, like how I mark up my charts. So let me get through this example real quick, and then we'll actually mark up the charts for what I'm expecting, you know, the next week. But nonetheless, so if we zoom out now, we can see that off of that 10 pip trade, even just off of the 3-minute structure. So before 3-minute structure even transitions at all. So before we even, you know, make a little triple bottom here to retrace, we dropped 32 pips, which is almost 3 times our money already just on this time frame. Okay, now if we back out to like the H1 time frame and we move our little marker over, we can see that we're playing off of higher time frame levels. So basically, once we snap past this support level here and this one here, I already knew the next level we're going to is here. If we snap past that one, and once again, look at the clues. Price did lower low, lower close than this level of support. So what does that mean? That means that price is continuing momentum. It does not want to maintain this support and go back up and bounce. It literally wants to break, retest, and continue. So now once we break this new low, I understand that that's most likely a H4 low. Okay, so we can see that that was previous support here. Well, okay, if we snapped 1 level, 2 levels, and 3 levels of H4 support, where do you think we're headed next? To a daily level. Okay, so after we snap those levels, we're now headed down to a daily level, which is now 86 pips away. Now keep in mind our stop loss was only 12 pips in this case, so we're at about 8 times our money. And then from there, of course, if you want to, you could swing to like a weekly level. But this is all by understanding how price action structure and transition works. All right, so now we see that we have a level of support here on the weekly time frame. That was our final TP. All right, now keep in mind, I don't personally trade NFP. If I'm already in the trade and I'm up like 30 or 40 pips, cool, I'll hold it, but I don't intentionally trade NFP. But what you'll notice is that NFP plays off of higher time frame price action. So basically NFP is you know, bouncing off of weekly levels. Now this is where it can mess up a lot of people. They don't look at a high enough time frame to trade that kind of news. All right, so nonetheless, this is now a 1 to 15 risk reward trade, which started with a 12 pip stop loss. Now, just to put this in perspective, this is without taking any more entries. Now, when price came back, we could have taken another entry with the same exact stop loss. So we could have been making 30 times our money on this one setup. And that's not counting, you know, if we were trading 1 hour zones or anything like that. This is literally all just, you know, the first transition in price action structure back bearish with the momentum of the trend. All right, so I hope that makes sense to you guys. Now, the next thing I want to go over, I don't want to, you know, take up too much time, but I do want to go over a little bit of candlestick analysis. Okay, so what do engulfing candlesticks actually mean? That's what I want to cover. What do, you know, what do these different candlesticks you're seeing actually mean? What do wicks mean? These are the things that's going to actually help you analyze the market better and be able to see things clearly. Let me stretch this one out a little bit. It looks weird. All right, there we go. All right, so basically looking at this little diagram here, we have a bullish engulfing, right? Now, what does a bullish engulfing actually mean? So let's say this is the H4 time frame, right? Now, on the H1 or a lower time frame, what this is actually saying is that we've broken structure back to an uptrend, okay? Now, if this is a bearish candle, basically what that means is that price opened here and closed here, okay? So if we know price opened here, then that means that the structure level, there was some kind of support there. Now price potentially pushed up to make the wick, so it made a high, and then price fell. Now it fell all the way down to here to make that low support level, okay? And then price closed here, which is where the close is on this candle. Now, obviously, we can tell that's a downtrend structure. Now, what did this price action do? It opened at that same area, so here, then it pushed down to the low, and then it shot up to a new high. Well, what would you call this pattern here? A double bottom, okay? Now, this can happen, it can form, it has to form a reversal pattern on a lower time frame. So if this is an H4, for an example, bullish engulfing, then on the M30 or the H1, you're going to see a transition. You're going to see a reversal pattern. And I'll show you some examples of this after I go over it. But nonetheless, basically, so price pushed up to a new high, pulled back a little bit. So overall, what you'll see is that candlesticks are just structure on lower time frames. And if you can start seeing the market this way, where you can look at an H4 candle and say, okay, I know on the M30 or the H1 that was a break of structure in this direction, you'll have more confidence in taking trades. Okay, so we can do the same thing for, we can pick any area in this market. Like, for an example, this area right here, right? So this is a little choppy, just consolidation. So what I'm going to do, actually, let's do it from here. All right, so we have a bearish candle. All right, so we have a bearish push down and we close here, right? All right, we open there as well. So we open here and it looks like we most likely push down to a level like this. We push up and we close here, okay? Next candle, we make a double top, we retest the same resistance and we drop to a new low, okay? So basically what I'm trying to show you guys is all this is just structure. This is all just patterns, okay? The market just makes tops, bottoms, it consolidates with trend lines and all that kind of stuff, okay? Now, I feel like I've touched on the gist of it. If you guys feel comfortable with this, let me know in the comments. Just put it like a yes if you feel comfortable with it. No if you want me to go over more concepts of it. But I'll make more specific videos later on all these different actual topics. What is this? Okay, there we go. All right, but nonetheless, so let's actually mark up the charts for this week. I appreciate it. All right, so let's go out to the weekly time frame. So we can overall see that the weekly time frame is in an uptrend. It's bullish momentum. So let's look to the left. Let's see if price is playing off of a potential level of resistance. Okay, so we can see price pushed up, honestly, all the way up into this resistance here and rejected pretty hard. Price closed under this one, and it looks like we're potentially using this level of support potentially as support now. I appreciate it, Ryan. All right, so overall, we know from a higher time frame perspective that we could potentially be finding support here on like the weekly time frame. Now, as an intraday trader, that only means so much. You know what I mean? because that's such a high time frame that it'll be hard for us to kind of try and track. So for me personally, my zone would first be off of resistance, previous resistance, and then the next one would be off of the last support level that price has not breached yet. Now, my zone last week was here. Price has not breached it with this wick right here. Now, until price actually closes another bull candle on this daily time frame, then I cannot draw my zone here yet. I will draw it here. All right, so now we're going to drop to the H4 time frame. All right, and we're just gonna tighten up the zones to the wicks on the H4 time frame. And now we basically have our range, right? So now the next thing I want to do is kind of, analyze, number one, do we have any areas of potential liquidity where price is now? So on the H4 time frame, you can see this was our last level of rejection. So what we can do is draw a potential zone there. Now remember, don't just take a trade because price is at a zone. Wait for the transition to take place on the 1 minute or the 3 minute time frame. So that is very, very key. Even if price reaches this zone, like I said, it could potentially be pushing up higher off of weekly support. So the way that you can keep yourself from taking a loss is, number one, trade in the correct session, because price will usually do, consolidation or, basically like more fake out type stuff out of session. When it's during session, it's usually around the level that it wants to take off from. So if price is, starting to make higher lows and higher highs on lower time frames, and it's not breaking structure, it's maintaining this trend line going up, then that's telling you that it wants to break through. And if it breaks through, what you're going to wait for is a closure above, a retest to this level, and then on lower time frames, you're going to wait for a transition going off of the trend line here. You're going to wait for a break, a retest, and then some kind of reversal pattern that's bullish to take the market up on the 3 minute, 5 minute, whatever you feel comfortable with. Okay, but nonetheless, once we take that trade there, since it's now off of a level that was established as H4 support, we can now potentially ride this trade up to another level on the H4 time frame, which would be up here. Now, if price does actually reverse from this level, what we'll see is a break of the trend line, retest in a bearish engulfing or hammer or whatever you want to call it, and then we put our stops here, and price is going to fall back down to the low. All right, and it's really that simple. Like, you do not have to overcomplicate this trading. I can see also we may have some kind of like potential trend line going down here as well. So let's see if we can get that on here. Does it need to retest on the H4 on the M3? Yeah, so personally, I would wait for the retest. And this also looks like a good trend line right here. So basically, if price does reject here and break structure, this would be your retest because price already established the zone here. Now, if price pushes up here and wants to break and maintain, then yeah, I would wait for price to push up. And what will happen, since we found a trend line, is price will bounce off of this higher time frame trend line before it actually, finishes its transition. So if it does break above this zone, it'll most likely hit here, pull back, okay? And once it pulls back, most likely that'll be your entry point, because when it breaks above, it's going to find some kind of support here and then push up. And then it's going to hit a resistance. So a trend line is pretty strong resistance, especially on the H4. It'll push it back down potentially, and then it'll basically be a 3 minute transition here, and then you can ride this trade up. All right. So usually, if price actually breaks above a level of resistance and then hits a trend line, I don't feel as safe taking it for a sell, for example, because now it transitioned. Remember, All we need to see for a transition is a break. Now we're waiting for a retest, and then we're waiting for a continuation to a new high. So we can potentially see that move as well. So that's a key to the way I trade as well. I always stay objective. And for an example, I can have a bias, but let's say, for example, I mark up my charts in, or let's say before London session, right? But I don't trade till New York. So when I go to sleep and I wake up in the morning, the first thing I do is look at the charts, and I see if anything potentially changed, right? So I'm seeing if my bias got shifted at all. Did we break past the resistance? Taking all these clues in. Then the next thing I do is usually step off of the charts. So I usually take a second to meditate, or I write everything down in a journal. So that way I have time to think about it before I'm just on the charts and I'm like, okay, my bias was this, now it's this, and you get all jumbled up. You always want to come to the markets with a very focused, clear mind. So you always want to take time to think before you act, especially, when you're putting your money at risk. Clarify daily zone, you mark in red. Correct. So for myself, I use red just because for me, daily zones are the strongest zones as a intraday trader. So I use red as like a caution sign. It's kind of like a subliminal thing. And then 4-hour zone is green in this case. Would you trade it if it's a risky trade? The thing is, as long as it fits my plan, then yes, I'm taking the trade because overall I'm using risk management. You know what I mean? And just like the trade I showed you guys before, it was a 1 to 19 risk reward. So even if I took 4 losses, and then I take another trade like that, it's literally, you know what I mean? It's just part of the probability at that point. So the key is just to continue taking the trades off of your perceived levels. You know what I mean? As long as you're at a zone, I would potentially take the trade if you see the transition take place on the lower time frames. If you don't, then I would not take the trade. Cho, been watching all your videos today and they're great. The video with the trading journey was really nice. Tried out the strategy, but didn't actually have success. I think the problem is that I'm not familiar with the strategy. Definitely, man. So basically, just to explain the strategy really, really quickly, let's say that this is daily structure here, right? So we're drawing zones off of the highs and the lows of the daily level, okay? Now, we're trading the legs of daily structure, okay? So for an example, when price leaves a resistance on daily, where is it going next? It's headed to a daily support. So in between these two levels, what we now can do is trade these little pushes and pullbacks. And what you'll notice is that price will always retest before the actual impulse happens, okay? So once again, I'll just delete this right now. Let me see. So once again, we'll start from the daily time frame. And all I'm looking for is previous resistance. So this is current price. I want to see what's the next resistance that price is going to hit if it pushes up. And we can obviously see that that's here. All right, then I want to see where's the next support if price pushes lower, which would be right here. So basically what I'm doing is I'm trapping price. So either way it goes, I now know where's the potential level it'll reach before it can turn around. Daily time frame is strong enough to reverse H4, H1 structure, and so on. Do you only trade with the trend or also with the corrections? I trade with momentum, because the thing is the trend will make you take hella losses, because you're not looking at these pivot points in the market. So let's go to another pair real quick. Let's check out like GJ, for example. Now, if I'm trading the trend, I'm taking buys this whole time, right? And holding them because I think it's going to go up. But what happens when moves like this happen? Why can't we catch these moves? You know what I mean? That's what I don't understand about people who only trade the trend is that they're not paying attention to all the details in the market. So for example, if we highlight this area here and move over to the right, we'll find this level of interest over here. Okay, so I'll highlight that level. And then what I'll do is I'll extend it to the right. And if we go back to current price, we now can clearly see why price fell here. So for people who only trade the trend, they just missed out on an easy trade of almost 200 pips. Okay, now once again, I usually fine tune my zones. So let's do that really quickly just so I can show you guys the very, very accurate way of how to take these trades. I think when I stream, like the trading view gets laggy or something. All right, so here we are. All right, so we're gonna zoom in and fine tune this zone real quick. And basically all we're doing is fine tuning it to the wicks. All right, so we're just gonna do that. And then if we go back to current price action is, what we can see is that this market is telling us, or I'm sorry, this price action is basically reacting off of this zone. And price action now is telling us that it's ready to reverse. Now, me personally, I will never buy into a daily supply area. And I'll never sell into a daily demand area. Okay, so when price comes up into this area, I'm only looking for sales. The only way I would be now looking for buys is if price breaches it with 2 candles, pulls back, and then gives me a confirmed push away from the zone. Then I would draw a new daily zone off of those wicks, and now that would be my new support that potentially price can maintain to push up higher. Now we get our first interaction to the zone on this wick right here. So on the first tap, let's say we took a transition, and we'll drop down to lower time frames. But nonetheless, on that first transition, price retraced 54 pips potentially from our entry. And then it came back up. And then from there, it dropped all the way down to 70 pips. Now, as an intraday trader, how many pips do you personally need to catch to be profitable? Because if I'm using a 10 pip stop, at max 20 pip stop, I'm still making 1 to 3 times my money by the time this even potentially thinks about turning around. Now, even then, price tries to do an overshoot and fake people out into buying. But I understand since we're at this daily level, I would not be looking for buys. I'm only looking for sells. So I'm now going to be looking on the different time frames for transitions in price action structure to give me the clue that price potentially wants to go short now. All right, and what we start to see is that number one, up here, we see we established level of resistance. We also broke a level of support, and we fell away, right? So price tried to make a little support level here to push back up. But remember, once price breaks a level of support, it's now going to retest it and fall away. All right, so we have an established level of resistance, all right, liquidity zone. So price is going to retest that. It's going to be a double top. It's going to show exhaustion on lower time frames, and then it's going to fall. Okay, this is very, very like simple concepts. And then once again, look at the time that it's setting up. Now, all this right here, 4:30. So I would say 4:30 is around like that London session cross. It's like starting to go into that crossover. But New York session really does not open until 5:30ish, 6. So price breaks up, right? So it breaks up here, retests the high, and shows exhaustion. After that, it gives us one of those hammer candlesticks at resistance, and then a bearish engulfing fall away. All right, so let's drop to like the 5-minute time frame and see if we can find a transition there, as well as to the left where that wick shot up. Personally, Cho, my stop loss is usually 20 pips when it comes to USD pairs, and then if it's GJ, you know, it just depends. Like now my entries are getting so good that I use like person 10 pips, but I teach my students 20 pips on USD pairs, 30 pips on GBP pairs until you can really pinpoint your entries. Once you can truly like, pinpoint your entries, then, you know, you can go to smaller stop losses. All right, so nonetheless, we're now into, you know, the actual price action of this area on the lower time frames. So what you're going to be looking for, once again, remember, once one time frame transitions, you're just waiting for the next one to transition. So don't get faked out by this transitioning back bullish. It already transitioned bearish over here. Now we are getting basically a higher time frame retrace to form a double top reversal on a different time frame. Okay, so price action on the 5-minute no longer matters. We're no longer looking at if it's in an uptrend or if it's in a downtrend. All we're waiting for is for it to pull back to liquidity to take the trade. All right, so price gives us this bearish hammer candlestick here. Now that was an easy sign for me to sell. Once again, I know we're close to my daily zone, potential overshoot, I'm taking the trade. If I fail to take the trade there, then I'm watching price fall away. We're breaking through floors. Okay, so now this was a previous level of resistance. We straight snapped through it. Previous level of support, snapped through it, and we stopped here. All right, so we stopped there, reversed, went back up, and made a bearish engulfing here. That's another entry point to sell it. Okay, so remember, if you're at a daily zone, if you're at daily supply zone, you're only looking for sells. Even if it looks like it's passing it, you're only looking for sells because like Dana had said, how she trades, you know, the wicks on, you know, the daily time frame or, you know, whatever. That's basically what's forming when these daily zones are broken. They're forming wicks. So price is going to shoot past them, form a wick, and then they're going to pull back. Okay, so this is all that was. It was just a wick and price pulled back, and now we're getting in at these pristine levels. Damn. Yeah. I'm gonna have to figure out how to keep it from lagging so hard. All right, but nonetheless, so now you know we're taking entries like this with a 10 pip stop loss. Yeah, I'll make sure I check the I'll make sure I check the Wi-Fi. Oh, okay. Oh, okay. You're saying it's Newsom's. All right, perfect. But yeah, so we get that stop loss at 10 pips, for an example, and then literally price just falls away. So once again, finding entries like this off of our zones, and once again, yes, this was an overshoot, but I'm just showing you guys basically, you know, the potential if you can truly understand what the market is showing you. So this is an easy 1 to 20 trade, and you know, price continues falling after. All right, so no less. So let's move over to where that wick was at. All right, so most likely this was news that spiked. Let me see. Hopefully it'll let me go there on the 1 minute. And thank you guys for real for coming online with me. Make sure you guys already, filled in everything you need to win that free FTMO account. I will be giving it out on the 15th of March. So if you guys haven't entered yet, make sure you enter. The video is on my YouTube channel. All right, I'm sorry guys, this is lagging a bit too hard. Let me see what's going on. So nonetheless, basically what we'd be looking for on the 1 minute time frame is for price to start pushing up toward our zone, making higher lows. Then once we get those higher lows, we're looking for a trend line, okay? Once we breach this trend line and retest, that's where we're selling it from, right here with the bearish engulfing, bearish hammer, whatever it is, with stop loss above it. All right, so now price is falling away. All right, Cho said you are going for the daily zones. What about the H8 and H4? Okay, so basically the concept I was trying to get you to understand is daily levels are going to be basically the furthest levels as intraday traders that we're really caring about, because the pip range between those levels are usually in the couple hundred pips. So as intraday traders, that's enough pip range for us to make a living. Now, H4 and H8 zones are perfect for catching trades in between this. So once again, if we leave a daily support, where are we headed next? Daily resistance. So we're going to catch all of the bounces, all of the created levels of support up to a new resistance on the daily time frame. And I'll show you guys an example of that. Let's see if we can find one. All right, so let's take this area right here, right? So price established a rejection here. And then we established a level of resistance here. All right, so once price bounced off of support, it went up to resistance. It's simple, right? Now, once price hit resistance and formed a new level of support, all we're doing is moving our zone, right, to a new level of resistance and support. And then look where price pulls back to. Price pulls back to the newfound support and then pulls back to resistance. Okay, we closed past resistance. So now we're looking to the left for a new one. But nonetheless, let's look at this area on the H4 and see how we could have caught entries off of zones. All right, so number one, we had an impulse level formed off of our daily zone. So remember, we draw our zones off the wicks. Now, if a zone was established over here, price fell all the way back to our zone here. Now, what we're waiting for on lower time frames is that transition I was telling you guys about. All right, so this is January 18th. So let's go there on, I'm going to just try the 5 minute because this thing is lagging pretty hard. Hopefully it works. Okay, perfect. So we make it back to the zone. Let me just zoom out to make sure this is the right area. Okay, cool. So we're looking for a zone, right? I'm sorry, we're looking for a tap to our zone, and then we're looking for a break of a trend line. So we can obviously see we have a trend line here. And then we have a smaller trend line here and here. Okay, so basically, once we form the trend line here, we get a breakout, retest, engulfing here. If you didn't like that one, we pull back, engulfing here. If you didn't like that one, pull back, engulfing here. And if you didn't like that one, I pull back and engulfing here. So basically, any of these, we could have bought on any of these engulfings off of this zone. So what happens after? Price makes a new high. So remember, we got our first break here. We got a break to a new high. This is a pullback. So a retest, and then we formed a new high, which is telling us the price has now transitioned, okay? This is also a inverted head and shoulders reversal pattern, okay? So we formed a reversal pattern, we pushed up, price is pulling back for a higher time frame like the M15 or M30 to potentially make a double bottom. But nonetheless, if we've entered already off of the zone, so let's just say we took it off of, like this bullish engulfing here. Now, once again, it doesn't matter which one of these you took. It's only like 2 pips away, so you would have been, 2 pips higher or something like that. Now, nonetheless, you could have still put a 10 pip stop loss on this trade. And price basically just shoots up from it. Okay, we go back and draw down. And I actually remember catching this trade. But we go and draw down about 4 pips, and that's it. And price literally takes off. So at this point right here, we're at 1 to 4 risk to reward. So what I'm going to do is just make this wider, and then we're going to zoom out to a higher time frame. All right, so we caught the transition of price action because remember, even though we're at a daily zone, in order for price action to bounce off of the daily zone and go back bullish, 1 minute has to transition to a uptrend, then 3 minute, then 5 minute, then 15. So as we see these transitions happening, we are basically building confidence in holding this trade. So now we see that on the H1 time frame, now broken resistance. Okay, we broke resistance right there and we're maintaining it. So now that gives me confidence to hold my entry. All right, so now where's price going to go to next? It's going to go to the higher time frame zone. We broke H1. Let's see what happened with H4. Okay, so the next H4 level of potential resistance was here, and we broke it. Okay, so where's price headed to next? Daily, which is up here. Let me see. Yo, you need to make a conscious decision. Then walk around with 85. You crazy, bro. All right, so that's how we can catch a trade from one level of support to the next level of resistance, okay? Do you move your stops to break even? Yes. So I'll never let a trade, I won't say never. It is an error sometimes, everybody makes errors, but I'm supposed to move my stop into profit once I hit, H4 resistance or support. Now, once that happens, like I said, sometimes I parcel out some of it and then I roll my stops. But sometimes, I just get too greedy and then, I don't move my stops and then price comes back further and all that. So, but yeah, it's always better to roll your stops, especially if you go into profit more than I would say like 30 to 40 pips, because at that point, you should easily, almost to your take profit as far as like a 1 to 2 risk reward trade, maybe even 1 to 3. All right, so nonetheless, price shoots up to the daily zone and then we get a nice rejection. And basically what we're looking for now is to make buys off of support, because we know overall we've transitioned on the H4 time frame because we broke resistance. So price is building up the momentum and steam to break through this higher time frame zone here. So we now have a zone drawn off of these wicks right here. And then what we can do is go to the H1 time frame. No, my strategy does not require ranging markets, because the thing is, you can always look to the left. If price is just shooting up, right, in your current view of, like for an example here, as price is pushing up here, even though I cannot see anything in this area that price is reacting off of, scroll to the left and you will find that level of resistance that price is acting off of. That's all it is. Price bounces off the same exact levels it created in the past. This is not anything new. You know what I mean? So by scrolling to the left, you can see, potentially where price is going to reverse every time. Does this strategy work for all pairs? Yes. The only thing that changes with this strategy would be how big your stop loss would need to be. For an example, if you're trading gold, I know it would have to be a lot bigger. If you're trading cryptos, definitely a lot bigger, like I think 100 pips or so. But yeah, it still works the exact same. But nonetheless, so as you guys can see, we had a bearish candle try to break through this level or this zone. We had a bullish candle push back up. Boom. So that cancels out. So now we know that price is potentially maintaining this area. So then after that, we get a bearish candle, bullish candle, bearish candle, bullish candle. But what I want you guys to notice is, once again, the transition in price action structure. It was telling us when it was ready to go bullish. Now, a lot of times people will get in trades and they're like, I knew it was going to go up, but I just got in too early. This is how you can know when it's actually time to take the trade. So we established a level of resistance, and we established another level of resistance here. We broke past resistance, right? We broke past the second level of resistance. So now we're waiting for price to retest, right? Because now price action structure is transitioning. We got the break. Now we're waiting for a retest and then a follow through. So confirmation number one, we're at an H4 zone. Confirmation number two, H1 structure has now broken back to a bullish price action structure. Confirmation number three, we want to see a transition on lower time frames at this level. Confirmation number four, trend line. Okay, and trend lines alone are strong as hell. So if you see a zone with a trend line in transition on lower time frames, take the trade. It's that simple. What if price spikes through your zones? Would you still enter? Of course. If it spikes through my zone, think of spikes a lot of times as like a bow and arrow, right? So you pull a bow and arrow back and you release it, and it shoots. You know what I mean? It takes off. Think of wicks the same way. When there's a long wick, for example, at a zone, and it's a long wick that shoots down and pulls back up, it's basically showing you that price was like building up momentum. It was pulling back, and then it's going to rocket. It's going to shoot higher. So once again, this goes into candlestick analysis and understanding, what it all means. But yes, at a zone level, if it overshoots and then a wick pulls back up, I'm definitely going to take that trade. Now, once again, let me highlight this area, and then what we're going to do is come here. So January 20th, we're going to go there on the 5-minute time frame. So it depends on price action structure, right? So if H4 time frame, remember the zones are based off of H4, H8, and daily. So H4 time frame comes back and retests the zone, spikes past it. So let's say it's a bullish zone, price spikes past it and closes under it. Then I need to see a bullish candle close back above that zone on the H4 time frame. Now, if H1 spikes past it and pulls back up, I'm perfectly fine with that, because it's not the entry, or I'm sorry, it's not the time frame that the zone and liquidity was based off of. So you need to see the break and retest on the same time frame that you draw the zone off of. All right, so here we are on the 5-minute. So what you can see is that overall, price started its transition on M5 here. Or actually, we can call it here, because we broke resistance here and we pushed up. So we got a break, we pulled back, retested, and then overall, once we got a new high here, was the real follow through. But if you want to say, once price action structure kind of broke back bullish, you can see here, we broke the last lower high because it's a 2-candle pullback to a lower low, price transitioned, pushed up higher. So that was our confirmed, higher high. And then price pulled back one more time to consolidate. Now, once again, this is all just like a channel, for example, right? Price consolidates not only sideways, but diagonally. So off of these wicks right here, I can draw a parallel channel. I'll take. Let me try that one more time. All right, so now we can see price literally consolidated diagonally, right, to build up the momentum to finally break upwards. And once we broke upwards, we closed past resistance. So now price action structure, once again, is bullish when ready to take the trade. So on lower time frames, M1 time frame, M3, look where price retests. It retests the break of this trend line. So we break retest. This is going to give us that overshoot, and it's going to pull back and close on the 5-minute. That's telling me where the momentum is at. Okay, remember, we're at the H4 zone. We're back into bullish momentum on the M1, M3, M5, M15, all the way up to H1, H4. We're maintaining a trend line. You know what I mean? And then price comes back here. Okay, so then we also get this transition here. Now, once again, if I see a trend lines are, you have to be a lot quicker with your entry, because sometimes it doesn't give you the break of a trend line retest and continuation. Sometimes the momentum is just so strong because it's going to make a wick for the H1 or H4 time frame. So if you see price pull back to a trend line at a zone, and you know what I mean, like all these confirmations are lined up, you kind of have to take that confidence trade. Now, the cool thing with trend lines is you know exactly where to place your stop loss. You know exactly where to place your stop loss, right? If this trend line is broken, I no longer want to be in the trade. So this is how I get extremely tight stop losses. If I see a rejection close on the 5-minute or the 1-minute, whatever, off of the trend line, I can literally put my stop right under that trend line, which is 3 pips, 4 pips, 5 pips, whatever. And I'm perfectly fine, because I understand if price pulls past it, I no longer want to be in that trade. But if price maintains it, I'm potentially maximizing my risk, my leverage for this setup. Okay, let's see. If there isn't a retest, is it instantly no trade? Correct. So the thing is, there's always retests during a week of trading. It's just up to us to be patient enough. All right. So the thing is, if you wait for a retest, your probability of success or a win will be around 85%. If you don't wait for a retest, that drops significantly to about, I would say, like maybe just a little bit above 50%. And that's not accounting for human error. Now, human error is the biggest part when it comes to trying to understand win ratios and so on. If I have an 85% win probability, then that means with human error, let's say 10 to 20%, now it's dropped to 65% accuracy, because everybody makes human errors, whether it's not entering the trade that turns out to be the huge winner, whether it's, entering a trade, not having confidence in exiting, it's whatever errors pop up in your trading, but you want to take the highest probability trades in the market. All right, so there was a bearish engulfing on the resistance. Why didn't you go for a short there? I didn't go short there because, once again, I'm trading off of higher time frame zones. H4 time frame is telling me that the market wants to go up. I'm not worried about any time frame under it showing me bearish signs. I'm only looking to buy unless price action structure on H4 goes bearish. Until it goes bearish, I'm staying in my bullish momentum or market flow. All right. So once again, this trade takes off. And like I said, this is one of those trades where you could use like a 4-pip stop loss. And then this is how you maximize, your trade sizes. So that's like a 1 to 17 trade. And then if you look at how long it took, because this is the 5-minute time frame, this was 21:30, so that's like, I think 10:30 at night. So let's say 10:30 at night, so 21:30. So this took about 4 hours to play out. So you made about 17 times your money in 4 hours. All right, so hopefully, like it's getting a little bit clearer to you guys on how I trade the markets, how I see the markets. Basically, and I'll walk you guys through this price action really quickly, just marking up H4 zones. But after this, let's actually, mark up the charts for the week, and then we'll wrap it up. But so once again, we established the zone. We tried to overshoot it on H4. We couldn't maintain it. Remember, we need to see a price action transition to go short. We did not see that. We maintained our structure and went up. All right, next we have a level of support here. Backtesting your strategy the whole weekend, man. It legit works. Thank you, bro. I'm telling you guys, like, this is legit all you guys need to know. I wish I knew this like when I first started trading, because I would not, I would have been way further than I am right now. So yeah, just stick to what I'm telling you guys and really trust it, analyze it. Chewy, I appreciate you, bro. So nonetheless, we get another zone here. We get a retest. Boom, price takes off. So like you said, Cho, overshoot, right? But look where H4 closes, back up here. So that means M1, M3, M5 all transition and push right back up in the structure. So all we're waiting for is that transition on M3, M5, and so on. How do you know when it's bullish or bearish momentum? Can you be more specific? Are you talking about market flow, like H4 market or structure, or are you talking about the price action structure? And I appreciate it, Lisa. All right, so nonetheless, we break above the zone and we establish a new level of support here. All right, price rejects, pushes back, boom. Take entries here off of the 3-minute break of structure, retest, and follow through. We take off. Now, in this kind of situation, I personally wouldn't have caught this trade just because it never retested this impulse level here and it just smashed up. So what I'll be waiting for, once again, is for price to make my zones again. All right, so once price establishes zones in the direction I'm trading, that's where I'm taking my trades from. And you'll notice, like, basically price will tap the zone, and after that candle closes on the H4, 9 times out of 10, it does not pass that zone again. So you can literally put your stop under the zone and you're protected. Yeah, when do you know if your market shifts? So remember, your market shifts because it either breaks structure or it starts breaking price action structure. I'll show you some examples, but nonetheless, I just wanted to kind of mark up some of these zones for you guys to see that this is very, very accurate. Now, this is a gap, but remember, if you highlight the support level of a gap, you know that technically you can fill it in with candles. Where does price come back to? The zone. This is all like very, very simple stuff. We established, wicks here. We had a bearish candle, bullish push, boom. Same thing here. Now, tell me, out of all these setups we just seen, and remember, these are all zones. This isn't something like that you have to be really picky with or anything. We're in bullish market flow. We're looking for zones to be retested on the H4 time frame. We're highlighting levels of support, waiting for price to come back to them. This would have been 1 winning trade, 2 winning trade, 3 winning trades. Now, you could have stacked all these. You've had one holding up to, what is that, 370 pips if you wanted to. Like I personally, I've held some that long, but I don't do it all the time. But once again, this entry could have been 280 pips. This entry could have been 270 pips. You know what I mean? This entry right here went up to 150 pips. This entry here went up to 105. And remember, you can trust in your entries because you understand that once daily support leaves a level of support, it's headed to daily resistance. So if I take a trade here in between the two, I know that it's going to flow to the next one. And if it doesn't want to flow to the next one, it has to form a reversal pattern. Okay, so if daily wants to continue up, so let's say with this pullback here, if daily wants to continue back into the uptrend, it has to form a reversal pattern on the H4 time frame. Now look, price action structure broke on the H4, reversed, came back to retest impulse, and then took off. Okay, so this is how the market moves. It has to make reversal patterns in order to transition, because all reversal patterns are transitions of market flow. So once you understand that, everything clicks. If your risk management is on lock, you can't lose, only lessons. That's very, very true. It's very true. All right, so nonetheless, let me just mark up the charts for the week real quick, and I'll let you guys go. All right, so let's see. All right, so we overall have our last level of daily support here. And then we do have a level of daily resistance here. All right, so overall price has not breached the zone yet, so I will not move my zone higher. Overall, our zone is based off of this wick right here and this level right here. Now, once again, price is putting in higher lows, and so on. So this zone most likely will be broken through, okay? Now, once it's broken through, like I said, I want to see a daily closure over this level, and then I just want to see a pullback and for price to establish support like it did here, okay? Instead, it'll be right here. It'll be some kind of rejection, and then I can just continue trading it to the next daily resistance. It's very simple. All right, now versus a level like this where price broke the level of support, that's obviously telling you it wants to go lower. This is maintaining support, so it's telling you it wants to go higher. It's breaching this level of resistance, which is telling you that it's very strong right now. The bulls are winning, so the market's going to continue pushing upwards. All right, so nonetheless, on the H4 time frame, I would have a zone here. All right, so the trade that I would have taken would have been off of this zone retest in this area here. All right, and you would have seen that price actually ended up hitting your take profit 1 at H4 level, and then we're sitting at the daily zone, which could have been take profit 2, and you would have won that trade as well. So overall, this is how my chart would look on the H4 time frame right now. I could have a potential trend line here if I wanted to. But yeah, I overall do potentially think this could break upwards. But once again, until it actually does it, I'm trading objectively. If price decides to consolidate and pull back to the trend line, I would be looking to buy it off of this trend line back upwards. Now, if we break past the trend line, simply wait for a retest, 3-minute break of structure with a retest on the outside of this trend line and sell it. You're going to sell it back to previous support. Once previous support is broken, you're going to ride it down to the daily time frame. All right, so let's go to the AUD USD real quick. All right, so we already have our daily zones. Now remember, we checked this out on the weekly and it potentially looked like it could be reversing to go back up. But nonetheless, until we actually breach this zone here, we're staying objective, okay? We do have a trend line based off of this level here. Okay, so potentially price could consolidate, try to push back up and reject off of this, but we just want to see how price action forms. So the thing is, patience always wins. If something doesn't look clear to you, then simply don't check the trade. It will be multiple more the same week on a different pair if you have to switch, but nonetheless, there will always be an opportunity if it doesn't look clear to you. All right, so overall, this is how I'd have my chart marked for AUD USD going into this week. So number one, I want to see, is this zone going to be respected? And number two, if we don't respect this zone, are we going to potentially reject off of this zone or this trend line and maintain the overall bearish momentum? Or are we going to maintain this broken level of support and then push off of it to go higher? All right, so we're going to stay objective. I'm also, like I said, I trade New York sessions, so there's a whole almost, 12 hours before I'll actually be trading the market. So there's a lot that can happen in between that time. So just the key is to stay objective. All right, and then we'll mark up the EUR/USD. I know some of you guys trade gold too, so I'll mark that up and then we'll wrap it up. All right, so we have our last level resistance here, and then so in situations like this, when it doesn't really have a wick, sometimes I will just highlight the body like this, but you can actually see price did close under the body here. So what I would do in this case is just draw my zone down here. Yes, I'm actually funded by FTMO. I mean, I could show you. Let me see. So nonetheless, these are 2 daily zones. And you can see I'm about to load the FTMO stuff. So on EUR/USD, we can see that it was like a very, very strong bearish push. We basically made a new low in the H4 structure. Now, I wouldn't really draw a trend line off of this just because it's pretty steep. I mean, I guess you could. All right, so yeah, you could have a trend line potentially like this. So in this case, the last H4 zone would be like somewhere up here off of these rejections here. Now, do I think price will make it all the way back up to here? No, unless it wants to actually break structure. So if it decides to break upwards and start transitioning, then it'll potentially hit this zone. But I wouldn't be looking really to take this trade if it breaks past this trend line. Unless I see it reject off of a higher time frame zone like the daily up here. Another potential trade that could happen is a retest of the previous low here, and to me that has a little bit more confluence with where price action is. So if price wants to pull up, we could potentially see a reaction here. Off of this trend line, 3-minute break of structure, retest with a bearish engulfing, and we could potentially see more downside. If we see a break above and a retest, we're most likely going to push ourselves up to this daily zone here. Oops, let's see. All right, guys, so do you have any questions so far? All right, and then just so you guys can actually see it, right now I have the FTMO account sitting at 3,400 in profit. So overall, you can see I'm refreshing it. All right, so it just refreshed, and you can see overall, it says current profit is 34.41. Okay, so I did catch that 8K trade, which took me out of my negative 3% on the account. And you could also see here, there's no end date. All right, so there's no end date, so that basically lets you know it's an actual account and it's not a demo account. Yeah, so overall I trade 0.5%, like I said. So I'm up about 3.4%, which is really good. This week, I'm just focused on, catching bigger trades, stop taking so many small trades that potentially won't give me the risk to reward that I'm now seeing in, some of my trades, like the 1 to 10s, 1 to 15. So I hope you guys can apply, some of this stuff that I'm showing you guys. Let me mark up gold real quick and then we'll call it. You guys have any questions before I hop off though? Oh, where'd it go? Why don't I draw my zones off the lower low that was formed? What time frame are you talking about, Linux? If you're talking about this lower low, it's because I'm looking for sells. I don't want to zone at support if I'm looking for sells. I want to set at resistance. All right, so let's mark up gold real quick. All right, so I don't know, I was probably showing somebody else some of this stuff. But this markup is actually still very valid. So you see we're kind of like in a descending wedge or something like that. I always get the names confused for those. But you can see that, price is kind of coming back above this daily level. So let's zoom out real quick to the daily. All right, you can see that overall price is still making lower lows and lower highs. We did close a candle past this level of daily support and then rejected off of it and closed. So what we can do now is just fine tune our zone now to the wicks on this candlestick here. We can also move this zone down now to here. And now we have our new range that we're trading in between. All right, so overall, we can see price action structure on the H4 time frame has transitioned bullish. We broke a level of resistance. So that means that we're going to head up to another level that is potentially strong enough to hold price. Now, we also are breaking out of this trend line. So what is that telling me? If we're breaking price action structure and we're breaking a trend line, that potentially lets me know that price wants to push higher. Now, we also bounced off of a daily support. So potentially we could see a retest of this daily zone. Now, what I personally like to wait for is for price to push up, reject, push up, retest. I will draw my zone off of the wicks, and then I'll wait for my entry on this second retest to ride it up. And price will probably break through and do something like this. And then from there, we can either see more downside, or we can see price continue to make higher lows upwards through it. Oh, my bad. I don't think I marked up GU, but let me go back. I think EU. So Linux was saying something about why didn't I mark it off the low? So I didn't mark it off this low because a bullish candle hasn't closed. I need to see a bearish and bullish candle closure on the daily to draw a zone. Same thing for up here. I need to see a bullish bearish rejection to close to draw a zone there. All right, so let's mark up GU real quick and then we'll wrap it up. All right, so we broke past this level. I will mark it off of this level here. And then let me change the color real quick. So like I said, I keep it very, very simple. I mean, I can mark up a chart literally, if it wasn't lagging right now, honestly, in like 30 seconds. And then you can see exactly why price does what it does. You know what I mean? You could have caught this reaction point off of here, off of the lower time frames, and you could have been floating, let's see. You could have already been floating like 60 pips, and potentially up to this daily zone again is around, what is that? I think like 200 pips. All right, so let's fine tune this zone to up here. And then let's see if we can find like any trend lines or anything like that. So we can see that this is like a huge overshoot, but potentially it could be you know, a trend line like this. All right, so overall, you know, that would be a trend line that I have. We could even check the 8-hour in this case and kind of see where the structure lies. So we can overall see our last higher low to a higher high was based off of this point here. We actually breached it. So potentially we could see some kind of retest and then drop. Like I said, though, what I would want to see is, you know, price maintain structure as it is now. If we start, because you see how price on the daily broke support here, we're now transitioning price action structure. We're breaking through floors and maintaining ceilings. So now I want to see these levels be maintained. If they're not, though, then we're going to start to see transition in the opposite direction. So overall, on the H4 time frame, as far as a H4 zone, let's see. We could potentially have a zone here because it was some kind of resistance at that level. Now, this does not look like the strongest zone to me. So once again, make sure you're waiting for the lower time frame transition if you want to take this trade, because it could potentially push up higher and then it could even hit this trend line and then want to continue downwards. Now, once again, if it hits this trend line and bounces and maintains this level, because this is a level of resistance. So if it starts breaking it and maintaining it as support, then it's going to bounce, consolidate, and break out. So stay aware, okay? Stay aware. You want to continue seeing floors being broken. All right, so that's basically my markup right now. As far as price action is right now, US or blank USD pairs are still bearish. You know, GBP, JPY, blank JPY pairs still look bullish. That's right now. Like I said, we'll see what happens in the morning. I might release, you know, some technicals either tonight or in the morning during my trading session to update you guys on the market conditions. So thank you guys for tuning in again. Once again, if you did not enter the free account giveaway, please enter that. I'm giving it away on March 15th. If you're in the Telegram group, cool. If you're not, make sure you join that. And once again, thank you guys. I hope you guys are getting a lot of value from this. If you have any questions, feel free to hit me up on any of the platforms. You know, I'm an open book, super transparent. So thank you guys.